15 minutes after the hour on a Crop Progress Tuesday, as Christina says, and she's mentioning many of the factors in the grain trade. Grain and weather has to be at the top of that list, or very near that. We talked to Jim Bauer from Bauer Trading yesterday on our Commodity Wrap program and made a quick comment here about, weather most every year is a wild card. Here again is our friend Jim Bauer.
Well, this is a strange year, as you well know. I'm in Indiana because we've had everything from corn being underwater, perfect conditions just a few miles away. But I had several calls today from South Dakota where they actually froze some corn overnight below the growing point, so there's going to be some damage there. But to see that kind of temperature this time of year, that's kind of unusual to me, and I've been around this game a long time.
Jim Bauer, and of course, he's talking about a Sunday night into Monday as far as those cold temperatures in the Dakotas. We are higher in the corn trade right now. Let's go to our good friend Brian Hoops joining us from Midwest Market Solutions and looking at the grain trade. Good to see you, by the way, again. Higher trade here today, and it's all, I would think, weather related.
Yeah, absolutely. It's a little reaction to this crop progress and conditions report that came out yesterday. The corn and soybean crops did not improve like the trade had expected. We received a lot of rain, especially in that eastern corn belt last week, and some cool temperatures, and we were looking for conditions to improve, and they really did. In fact, in the western corn belt, conditions really starting to deteriorate in states like the western part of Iowa, South Dakota, North Dakota, Nebraska, parts of Minnesota. Those states are going backwards, and so that rain that's forecast next week is certainly needed, and the market's putting in a little weather premium here as a result, trying to build some price levels back into where we used to be before we dropped so hard into last weekend.
What about that weather premium? It seems like all through so far the spring and early summer here, just a week into the summer, the trade's been reluctant to put a quote weather premium in the corn and soybean complex.
We've gone the entire growing season with conditions below year-ago levels, and we've really not put much of a premium into this marketplace. We had 1 week where the funds covered about 117,000 contracts of their short positions in corn that rallied us above the $4 mark, and since that time frame, they've been back into this sell mode here and pretty much entrenched into being short. So it's going to take something significant, I think, to get them back out of their shorts again and get this market back into that $4 range in the corn. And, these rain events next week look like they're going to be pretty much across some of the driest areas of the corn belt, but there is some areas that are going to remain dry. We're going to have some crop stress. And once we get past the 4th of July, the time's starting to run out on corn. We'll see a lot of corn pollinating. But, right now we are looking at some really tough growing conditions in that western belt.
And then soybeans here. Again, Brian Hoops joining us from Midwest Market Solutions. 8 to 9 higher in beans. What do you make of that, with more acres likely going to be showing up in Friday's report?
Yeah, I certainly expect we're going to see more acres in the soybean market, and that, I think, could be kind of a wild card to see what the USDA throws at us there. We'll also have quarterly stocks. Those stocks are probably going to be down a little bit. I think the USDA's underestimated usage in this quarter for soybeans. As we get into this report on Friday that you're talking about, we could see a little bit more short covering going into it because of that uncertainty that report is going to bring to us.
Very good. Brian Hoops joining us here live from his office in Springfield, Missouri. Not done yet. We'll take a break, come back, and get his thoughts is a turnaround Tuesday in the livestock complex. We'll find out his thoughts as we return after this. 20 minutes after the hour, back to our comments here from our good friend Brian Hoops from Midwest Market Solutions. And Brian, the livestock complex in here, the trade, well, I don't know if you were caught off guard. We heard a lot of folks saying they were surprised by the run up in the cattle and feeder cattle, though, yesterday.
You know, I shouldn't have been surprised by this cattle market, but I certainly was. I did not expect to go limit up yesterday. We're venturing towards limit down today, and there's just no rhyme or reason in this cattle market at this point. You know, fundamentally, we're seeing some of these sale barns yesterday and continuing today out in the Dakotas with much lower prices than what they were last week. And that is a bad sign for the cash trade this week. I think the boxes look like they are starting to work their way lower. And overall, I think this cattle market is starting to turn its charts lower. But, certainly yesterday really caught a lot of traders off guard, and I was surprised we went limit up.
Yeah, and we are lower. Let's look at the live cattle futures right now. And as you mentioned, they're on their way. August is down 230, only 70 more points. They'll be limit down. Actually, well, it won't be limit because they can go 450 points, as you know, expanded because they were limit up yesterday. They can go 450 points lower today. Look at feeder cattle. So we're down $1.50, $1.60, over $2 in live cattle. Feeder cattle can go 675 points with their expanded trade. They're over $2.50 lower today, Brian.
Yeah, it's just a very volatile market in here, and it's hard for these producers to take advantage of these type of market opportunities, because when we see rallies, the question is this an opportunity, or will the market rally another $3, $4 without any real news or justification? And it makes it really difficult for these producers, especially when the futures are so discounted out into the deferred contracts like October and December.
Exactly. But let you go before we get your thoughts, though. I want to get those on the hog complex here. Weaker in lean hogs here on the day as well. Not nearly as much, but still August around 78.5.
Yeah, this hog market is one where we're hitting contract highs in the July because of very strong cash trade. But August, October, December, big discounts to that cash market. Market's really anticipating we're going to see cash work its way lower into the second and third quarters of this year.
Very good. Brian, thanks for your time as always. Good to visit with you. We'll look forward to keeping in touch.
You bet. We'll talk to you soon.
Thank you. Brian Hoops, it's Midwest Market Solutions, based out of Springfield, Missouri. All right, as promised, here are the numbers here. Live cattle, feeder cattle, hog futures. We are lower in here. June still on the board. Live cattle, 119.62, and that's down $1.86. August live cattle down nearly $2.50 now, 115.80. Feeder cattle, and they have expanded limits here as well. Right now, they're about, well, not even halfway there. They can go down 675 points. They're down $2.65 for August, though, 146.80, and now 273 as we get a live quote there, 146.72. It's a live quote from the feeder cattle complex. September down 290 at 146 even. Hog futures, as mentioned, under some pressure here, especially those deferred contracts. We see that again into the fourth quarter, big drop from where we are now. July over 86.5, December 61.5 roughly as we sit right now. Lower July down 40 points here, Janet, at 86.62. We'll keep an eye on that. We'll have updated cutouts here top of the hour.
All right. Thank you very much, Mark. Appreciate it once again.